Okay guys, so in today's video we're going to talk about how Netflix is releasing their worldwide subscriber stats by region for the first time ever. So as Disney Plus and HBO Max and all these other streaming services are beginning to launch and take in subscribers, it looks like Netflix is using this data to kind of separate themselves from the pack and show investors that they are growing quite a bit internationally. So here's an article from Engadget. It says, for the first time, Netflix is reporting its international business operating results by region. So this is a huge step in the right direction. Obviously, Netflix is pretty saturated in places like US and Canada, but Europe, Middle East, and Africa, Asia Pacific, and Latin America, there's lots of growth to be had there. So as we can see here, more than half of Netflix's 158 million global subscribers, and 90% of its growth now come from outside the US. So since the first quarter of 2017, the European region has seen a 140% increase in subscribers, and the number of subscribers in Asia Pacific has more than tripled, and now Latin America is 29 million plus subscribers, up from 15 million. So obviously the US and Canada still has the most subscribers, but as you can see, membership is growing much slower. But the good thing is that overseas there's a lot of room to grow. So I want to actually head into the SEC release that they published on the 16th of December. You guys can actually find that information really simply by going to, you just go to netflixinvestor.com, and then all you have to do is go to netflixinvestors.com and then go to SEC filings. You guys can check out the report for yourself. So let's quickly open the report. So basically, Netflix is just using this to be more transparent, and ever since they launched this report, the stock's been rallying quite a bit. So I actually bought Netflix shares right around the $280 price point. I was just looking for a decent price to move into the stock, because I noticed that it had been trending down quite a bit since its a recent high at 400. So let's just quickly look at the information. As you can see, just click right here. Okay, so this is for 2017. So I just want to go to the 2019 numbers. They actually released their numbers for the last 3 years. So let's go into the recent data. So right now, here we go, starting with the recent data. As we can see, it's broken down by quarterly. So right now, obviously, the biggest market is United States and Canada. And what I'm looking for is basically, I want to see the subscriber growth, because as you can see here, we have average monthly revenue per paying streaming member is pretty consistent, and it's actually growing in the US and Canada. So what this means is that even if the subscribers aren't growing as much, as long as they can continue to raise the price and earn more revenue per member, they're going to continue making money from the US and Canada region, even if the subscriber base isn't growing as fast. So as you can see, it's growing slowly, so not an exponential growth like in other regions, but the growth is there. So ending September 30th at 67 million plus subscribers, $13 an average subscriber. Now for Europe, Middle East, and Africa, they ended September 30 with 47 million subscribers and earning around $10 per. And these numbers, and for Latin America, they ended the quarter with 29 million and an average of $8.63. And as you can see, that number is trending up as well. So they just continue to slowly raise their prices and earn more revenue per user. And as you can see, the growth in members keeps increasing as well. And in Asia Pacific, finally, which is one of the biggest areas for growth, because simply Asia Pacific region, now minus China, of course, because Netflix is banned in China. But in the Asia Pacific region, there's a lot of people that live there, especially India. As you can see, the revenue per visitor isn't as great, but it's still higher than Latin America, and these numbers are growing a lot. So why did Netflix release this information? Well, it just kind of shows that even though there's competition, Netflix is continuing to grow. So I think this is one of the reasons why Wall Street is kind of in love with the stock again, because at the end of the day, the future is video. So the future of content is video, and people are going to continue to watch video as we approach 5G networks, as people get faster internet connections. More and more video is going to consumed, and what we're seeing is that Netflix is still growing amidst all the new competition. So yeah, it'll be really interesting to see how they perform in Q4. They're going to post results in January. So that would be really interesting to see. But I think Netflix is still a long-term stock hold for me. I don't plan on selling my shares anytime soon, and this is kind of one of the products where I use it myself. You know, I use Netflix every day, and I share a subscription with the rest of my family, and they just love it. So, you know, as long as I continue to like the content personally, and as long as the company continues to publish their own nice content, I will continue to hold shares in Netflix. So this is kind of a quick video, guys. I just thought this was a really interesting release, and as you can see, the stock is rallying quite a bit. So I just want to quickly look at the stock before I end this video. Okay, so we're inside my Robinhood account. I want to quickly show you guys this stock. So they published that SEC filing on December 16th, and since then we've moved up from kind of around the 300 range up into the 320s at a high of about I'd say around $325. So a little bit of resistance at 325, but so far pretty nice run, almost, you know, a pretty nice run up we've had lately, around 8 to 10% run up in a few days. So, you know, remember this stock used to trade at $400, so we're basically a year later, and you can still get the stock at a discount. I know a lot of people say I missed it, but looking at those subscriber numbers, I think there's a lot of room for growth for Netflix in the future. You know, just in May, the stock was trading at $385, something like that, May 2019, and now it's over 6 months later, and they've added more subscribers, yet the stock is still cheaper. So even though the PE ratio is quite high on Netflix, 95 PE ratio, one of the higher PE ratios you're going to find on tech stocks, I just think for the future of video, Netflix is still the dominant force. They still are king of the world when it comes to video in both short form TV series and long form movies. So let me know what you guys think about Netflix stock. Do you think it's a buy? Do you think it's a sell? Are you holding your shares, or are you buying puts? So you think the price is going to go down? Are you going to buy calls? What are you going to do with this information that Netflix recently released? So that's it for now, guys. Please like and subscribe to my channel, and look forward to more videos. Okay, thank you for watching.